from this oil and gas sector. 90 days of oil and gas, and yesterday, on 11th Friday, that is September, there was an agreement which was signed between Total E&P and Government of Uganda in the host government agreement for East African crude oil pipeline, the EACOP, that was signed. And then yesterday, Sunday, 13th September, our own President, His Excellency Yoweri Kaguta Museveni, met with his counterpart, His Excellency Pombe Magufuli in Tanzania, to sign the host government agreement in Chato, Tanzania. Now, this morning, we're breaking down on what went down in that agreement signing, and of course, to know more details towards the final investment decision made in this very big and amazing oil and gas sector. With me this morning is the Chief Executive Officer of the Uganda National Oil Company, Ms. Proscovia Nabbanja. A very good morning to NBS, and thank you so much for sparing time to come to us.
Thank you so much.
What went down in the signing of this document?
What was initiated on Friday was the host government agreement, which shows alignment between the government and the development partners on how the East African crude oil pipeline project is going to be developed. Now, alongside that, we also had the deeds of assignment and novation that allow our company, the Uganda National Oil Company, to back into the joint operating agreements. So that was also initialed on Friday. Then yesterday, we also saw renewed commitment between the two heads of state, His Excellency, the President of the Republic of Uganda, committing with His Excellency, the President of the United Republic of Tanzania, on the development of the East African crude oil pipeline. That being said, of course, the background to the East African crude oil pipeline, if you remember, we signed the intergovernment agreement a couple of years ago, and that set the baseline to negotiate the host government agreements. The host government agreements are really to make sure that the host governments, in this case Uganda and Tanzania, are aligned on how the East African crude oil pipeline is going to be developed, because at the end of the day, you want to get a bankable project that is seamless across borders. So this is a very important achievement that we've made by endorsing these contracts, and it shows a commitment between the governments and the joint venture partners that actually we can deliver the Tilenga and Kingfisher projects in a timely manner.
All right. So how long have these negotiations taken? Because we know that when two governments come in place, first is security, then other things can come in. In terms of oil and gas, how long has these negotiations taken, and do we see this come to pass?
The host government agreement has taken close to 2 years. Of course, there's been hiccups here and there, but what's important to note is the fact that if you're negotiating an agreement, all the rights and obligations have to be discussed. You have to make sure that the value of all the parties is protected in the contracts. So it may take some time, but I'm glad this has materialized. Equally, the joint operating agreements, remember when a government issued production licenses, government declared participating interest of 15%, and the Uganda National Oil Company was nominated to be the commercial arm of government that is going to manage that 15% state participation. Now, from the time of issuance of the production licenses up to today, there's been that negotiation. Of course, the Uganda National Oil Company wasn't formed by the time the production licenses were awarded, but having been operationalized in 2016, we started discussing with the joint venture partners on how we enter into these agreements. So yes, it has taken time, but when you look at the granularity of what you're supposed to discuss in those agreements and your ability to retain value for the state, it was worth the wait.
Since it has taken 2 years to make it come to pass, and yesterday was, I think, a D-Day, let's delve into what are the key terms in this agreement?
For the host government agreement, again, the terms are really related to governance, legal, and commercial terms. But just to break it down a little bit, of course, you have to agree on how the pipeline is going to be governed. You have to agree on how the crude is going to be transported from the export hub in Hoima to Tanga, who are going to be the parties to the transportation or to the East African crude oil pipeline system? What are the tariff obligations? How is the tariff going to be computed? If you have a third party that is tapping into the East African crude oil pipeline, what are the terms and conditions they're going to enter into that project? And of course, there is a discussion on the volumes, what is allocated to the refinery, what is going to the East African crude oil pipeline, and also some visibility of the future perspective of this pipeline. If you hit the target reserves that we have today of slightly above 1 billion, what happens? How is the governance going to work? So the terms are quite detailed, and for every term there is a little bit of granularity to it, but it's really been a tough, negotiation. But I'm glad this paid off. Now, when you talk about the joint operating agreement that led to the signing or the initialing of the deeds, again, their UNOC has the right to sit on the table by the virtue of the fact that you're holding the 15% interest within the joint operating agreements or the contracts. Now, the terms we've been negotiating there is what voting rights do you have? How do you authorize expenditure? What are the interest rates you're looking at? How is going to be carried at what cost? And what happens when you default on payments? Literally, getting deeper into how to operationalize the JON, knowing that now UNOC is becoming part and parcel of those agreements.
I saw on Twitter when the picture broke the internet with President Museveni was meeting with his counterpart, President Magufuli. People were tweeting and saying, should we expect the fuel prices to go down after this meeting? But let's zoom into this very question. What is expected in the oil and gas sector after this agreement?
After this agreement, what we anticipate, of course, it's not the end of all agreements that are being negotiated. It's now to start discussing the transport and tariff and transportation agreements. There's the crude lifting agreements. There's the shareholders agreements. And you see the way we are moving from intergovernment agreements, and then you break it down to an agreement between the states and the joint venture partners. Now the next one is to discuss between shareholders, the people who are going to form that special purpose vehicle that is going to deliver the project. So in the shareholders agreements, of course, the key parties to the shareholders agreements, you have the joint venture partners, and then you have the Uganda National Oil Company, and you have Tanzania Petroleum Development Corporation on the Tanzania side. So when these are concluded, we anticipate that we'll achieve final investment decision, hopefully by close of the year. And then when final investment decision is met, then you will start getting into the contracting, because today we've seen a renewed effort to reopen the tenders for engineering, procurement, and construction. But when you get final investment decision, then you lock in those contracts, and then the service providers start getting subcontracts below the main contracts. So that is what we envisage, and we hope that knowing that the host government agreement has been concluded, the other agreements are going to be quite easy to go through, because the basic principles or the main principles governing the projects are now landed. Now for the joint operation, of course, that's for the HGA, which is the host government agreement. But for the joint operating agreement, it now allows UNOC to sit on the table. And like I said, it has, we have a voting, we have the rights and obligation within the joint operating agreement. So whichever work program that our partners are presenting, whichever budgets, we scrutinize it and make sure that the state has value for money. So when you sign off those deeds, you have that seat on the table with the rights to vote, with the rights to contribute, to the work programs and budgets, and then you have that discussion on how to create value out of the projects.
Yes, now that this has gone this far, this agreement has gone this far, what remains to be done between now and achieving the final investment decision?
What remains is to conclude the shareholders agreement, to discuss the tariff and transportation agreement, because the parties, of course, the government has finalized the host government agreement, fine. But there are other parties that now you need to discuss with. As a national oil company, we need to discuss with the joint venture partners on how we are going to lift the crude, how the transportation is going to be done, how the shareholding is going to work, how the project is going to be financed. So all those are going to be discussed between now and final investment decision. And when all this is settled, then final investment decision will come. But we anticipate that is really going to be quicker because the governing principles have been resolved.
Now, Ugandans out there would be like, like the normal Ugandan would say, yes, the oil agreement is being signed, we are seeing things being done in Hoima, but Uganda.
The Ugandans will certainly benefit, and there's been quite targeted initiatives to make sure that local companies participate in the sector.
Exactly.
Number one is the 16 ring-fenced services for Ugandan industries to participate, and there's a list of those, including ICT, warehousing, logistics, forwarding, catering, hotel services. There's so much of that that has been listed down, and Ugandans need to prepare. Of course, there's also the contracts that are going to come out of the engineering, procurement, and construction, and Ugandans can get subcontracted under those EPC contracts. On the other side, of course, we've taken initiatives as a national oil company to partner with the likes of the Stanbic Incubator Program that allow us to interface with the small to medium enterprises to discuss issues of bidding. How do you submit those winning bids? How do you prepare yourself in terms of standards for the industry? Because the standards are quite stringent. How do you get the requisite certification to allow you to, get that contract? How do you prepare your documentation so that if an international player is required to joint venture with a Ugandan company, they find you worthy to joint venture with them?
Yes.
So there's quite a number of opportunities. But what we do is to make sure that Ugandans are prepared to participate by giving them the right information, by removing the information asymmetry, by creating financial products that suit the business lines that they're going to get into. And I believe, all we need to do is to make sure that the companies are prepared to participate in the sector.
I would pose a question of this discussion. What is better for Uganda? Is it exporting the crude oil or having a refinery in our motherland?
That's an interesting question. Of course, for any country, you would want to retain some value in country. And when we discuss the commercialization plans for the crude in Uganda, we agreed that we will have refining capacity in-house or within Uganda, and then the balance exported to the international market. Now, knowing how the reservoirs or how our fields are performing, with a global number of 230,000 barrels of oil per day, if you set up a refinery of that capacity, it will go way above the domestic demand. Today, the consumption of Uganda in terms of petroleum products is about 60,000 barrels of oil per day. So if you look at that, it's slightly above 30,000, but what the refinery is going to be processing is 60,000 barrels of oil per day. So when you look at that, you know that it will satisfy the domestic market. Now, of course, from the investor side, you have to have a bankable project, and the investor can't produce minimal volumes when the capital requirements for the upstream development is over 8 billion. You need to recoup the investment. And in order to recoup the investment, they have to export some of this crude to the international market. So it's a balance between, retaining a substantial amount of volume to satisfy the local market, but also transporting some to the international market. And so far, I think it's working out well. And we know that there's more efforts to enter into exploration. We are anticipating more volumes to come on stream. And that will even improve on what is being processed in country and also for the regional market.
Thank you so much, Ms. Proscovia Nabbanja, for sparing time to come and discuss oil and gas. And for my happiness, she's a Rotarian, and I'm also a Rotarian, so it's been a Rotarian thing on the morning breakfast. We shall go in for a very quick commercial break, but morning breakfast continues. Good morning.